Hi, welcome to today's lecture, 3rd of March 2018. Today we'll be looking at price and volume analysis. There's an interesting thing about this concept of price and volume. One thing about price and volume is that they are key data that most investors really don't take cognizance of, but they are very important tools in making investment decision. So today I will briefly, the approach will be I will do a 2 to 5 minutes video that you watch. I will also give you the presentation. Then we will now do a lot of case studies, practical case studies and references. So that when at the point of leaving this lecture, you'll be able to make investment decisions, see the strengths of price and what the big players are doing. With these two data, you can be able to see what these big players are doing and trade or ride what they are doing. So first, there are two key elements here. We have price and we have volume. We all know price is the value of a stock. Price is so um, price is actually the value of a particular stock at a particular point in time. And here we are talking about price action or price movement. Price movement shows how price is moving in a particular stock, probably one day to another. So and it's a function of the law of demand and supply. So the interaction of demand and supply determines the movement of a price, or the movement of a particular stock, which we usually see in price. If a particular person thinks a company share is undervalued, it tends to buy, while the counterparty who sells to that person sees that share as overvalued. So it's this interaction, and this is what leads to price. So I won't do much, but what we want to know is that price is a reflection of the forces or interaction or interplay of demand and supply. So the other element, which is volume. Now, volume is a technique to assess the health of a trend. What do I mean? When you see the share price of a particular stock rising or going up day by day, volume tells you or helps you to identify whether this uptrend seen in this particular share is actually strong or is weak. And this gives us a lot of pointer and indication and a lot of indication. So what volume does is to assess the health of a particular trend. So most of us we tend to see the volume figures really given to us at the end of a trading day by a broker, but we don't really understand how this works. So volume helps us to determine the health. That is what it does. And with this, you'll be able to see what the big players are doing. You'll be able to understand their psychology and the sentiment of the market measuring this. So the volume measures how a given asset has been traded in a particular period of time. Bottom line, volume indicator is one of the simplest yet but powerful method of observing buying and selling activity of a particular stock at a particular level. Now, the truth is this: both technical analysts and fundamental analysts actually take notice of the numbers of shares that are traded on a particular. So you don't need to be a technical analyst, you don't need to be a fundamental analyst. As long as you are an active player in the market, you should be able to understand the relationship between price and volume. So like I said, volume shows the health and strength of a particular share price, the trend of a particular share price. Don't worry, I'll give you practical examples, but I want you to understand I want you to have a basic understanding of what this is so that it could help you to determine what you would do. Are you getting? So let's go to this basic principle of volume and price. Remember, we said I want to make this video very short, but I also want you to understand the basics. Now, when we say trend, means price rises up and down. Now, trend means movement. So when you see a particular share price, GT for instance, trending from like 2 naira to 40 something naira, it is trending up. Now, volume also would help us to determine the health and the strength or weakness of this trend. So there are 4 key things you must note. When a share price is rising day by day and you see a rising volume, it tells us that the trend is strong, which means that a lot of people are willing to buy as the share price is rising. So that is why we see an uptrend. It's a strong trend, so you would see more uptrend. Now, when you now see the second scenario is this: when you see price of a particular stock day by day rising, and you are seeing volume, and you observe that volume is reducing day by day, it tells us that this trend, that this price share price that is trending up is weak in price momentum and is an early signal that there's a suspect in this trend. So as an observer or as a player in the market that wants to be smart, it tells us that despite the fact that we are seeing a rise in volume, people or much people are not ready to buy. Only few people are buying into the stock. So it's an indication that I need to I need to draw back. If I take my quick money, let me be off. I don't need to wait because there's a weakness in that trend. But on the other hand, falling when you see the share price of a particular stock fall and you see a rise volume where volume risen that day, it tells us that that trend is strong and you will see more downtrend because it means that a lot of people are willing to sell and the share price is trending down. So the fourth scenario is this: when you see the share price fall and you see volume also fall, it tells us that that downtrend is weak, meaning that a lot of people are not willing to sell despite the fact that the share price is falling. So four key scenario: one, price is rising, volume is rising. It tells us a lot of people are already willing to buy more into that share price. The second scenario is this: share price is rising but volume is falling. It tells us that less people are interested in the share price, in the share, despite the fact that it's rising. The third is this: we see price falling and volume also rise. It tells us that a lot of people are more willing to sell than to buy. It tells us that there is more strength on the downtrend, so more downtrend is expected. The fourth scenario is this: when you see price volume falling and volume also falling, it tells us that there's a resistance to sell. So few people are only selling, and you know that there's a resistance to sell. So these are the four key things that you must understand. So when you're observing volume day by day, uh, you must understand these four things. Look at the behavior. Today, the share price has risen. Now the volume also has risen compared to yesterday's volume. It gives us an idea of what the sentiment is in the market and what the players are doing in the market. So having understood these four key things, how does this strategy helps us? Now we have what we call a breakout strategy. Now what does a breakout strategy mean? Is that when you see price rise sharply above a particular level that it has, people usually sell at that level, and you see price rise and you also see volume rise, it tells us that a lot of people are already willing to buy. So I won't be more technical here. I want to, because I understand that I shouldn't be more technical, so I will try to beat it a bit down. I'll also give you examples today, so don't worry, just calm down. When we go into the examples, I will point out one or two things that you need to understand. So we have a breakout strategy. We have a trending stocks. Trending stocks, simple. When price is trending, volume is also trending. Price is trending up. Price is increasing day after day. We also see volume also going up day by day. Or when price is trending down, coming down, and you also see volume also coming down. So those are based on the first scenario. There's what they call volume spike. I will explain that in the next slide. And there's what they call false breakout. So I don't want to be more technical here, but I just want to know that there are four strategies here. Now, when there's a breakout above resistance, so I don't want to be more technical here, just don't worry. Now, in when we say volume spike, I want you to know something. There are some particular day when you see the percentage change in price when it is going up could be marginal, but you now see an extraordinary spike in volume, extraordinary rise in volume. Let me just give you an example to this. I think for me to drive home this point, I think I need to give you a practical example to how this works. When you see a particular day where you just notice that the share price rises sharply, but volume was down. Let's look at this day. GT Bank, for instance. Now, sorry, I had to pull up this chart because I just had to explain this aspect of spike. We saw a particular day where, look at this day on the 12th of January. If you look at this day on the 12th of January, we notice that GT Bank before now has been trending up, has been moving up day after day, until on the 12th of January. At that point, we also noted that the volume that were traded were actually around 38 million units each, average around those points. And there's this particular day on the 12th of January, we saw price closed around 1.2% in GT Bank, but we now saw 68 million units of shares that was traded that day. That day is what they call a spike. It's an early signal that the uptrend in GT Bank would soon end, and we should exit our position. We should prepare to exit our position because 68 million before now, for like 10 days, we've not seen the share price trade 68 million except in December. So we saw 68 million in like 10 to 15 days. After 10 to 15 days, we saw one day 68 million. Then it's an early signal. Yes, though GT Bank trend up, but as a technical analyst or as a good market observer, it tells us that the smart ones are leaving the market this day. So don't be deceived with this trend. Afterward, we saw GT Bank actually trend down. Then, so that explains the spike. Sorry, I had to pull up this chart. Don't worry. I just had to explain it to be able to explain it with the chart. So before I go to the Excel sheet, so the key figures. How do you now work with volume and price? There are two figures, two important information that you need. You need price. Whether you're working with a daily time frame, weekly or monthly, whether you're making your decision based on a weekly basis or a monthly basis or a daily basis. So if you're working on a daily basis, you know your stockbroker sends you market report every day where they give you activities, especially if you receive from Meristem that tells you the open, high, low, close, and even the volume that was traded in that particular day. So when you get all this figure, in the price you need the open, high, low, close of a particular stock. You also need the volume that was traded on that particular day. Now, there are two ways you can work with this figure. One, using your Excel sheet. That could be easy. There are other ways, but two easy ways. Using your Excel sheet. What you just need to do is to input the open, high, low, close of a particular stock. Calculate the difference between the open and the close. When you calculate the difference between the open and the close, look at the percentage change. Also volume, also the percentage change between today's volume and yesterday's volume. So this, you work on this. I will also show you that on Excel. Or the other part is use true chart. What the chart does in essence is the same information that you have in Excel, but what the chart does in essence is to give you a better visualization. That is just it. So I don't need to start calculating, but for me to have a better visualization, I just work with the chart. But let's take a look at a case study, Afrifood, for instance. I actually inputted my chart from 2nd of February down to yesterday, that is the 2nd of March. So what I did was to input my open, high, low, close, and what I did to find the difference between the open, the close, and the open each day. Then I now find the percentage change for each day. So there are some days that they are positive, there are some days that are negative. So the next thing what I did was to also input my volume for each day and I found the difference between previous current day minus the previous day, which was this. Then I got the percentage change of the previous current day minus the previous day. Percentage change was this. So as well, we also see that we can see the positive and the negative. So now they were what I now did was each percentage day